Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully all of you are doing very well today. And in today's markets, guys, well, we've officially been through another record-breaking day in the stock market together. It was another one for the history books, as a matter of fact, as we have seen one of the largest intraday swings that has ever been recorded in financial stock markets in the USA specifically. Today, what started off as a very beautiful green day of bounces across the board. The SPY at one point was up over 3% from yesterday's close, and the QQs were up over 4.5% at one point in the morning as well. All that quickly reversed intraday, leading to one of the largest intraday swings of all time. Take a look at this right here, guys. The intraday trading range. You will see that today was only bested by a few different times in history. Once in 2020, once in 2008 and 2009, and then you would have to go all the way back to either the tech bubble bursting or the market crash of 1987 to find a single day in which the markets at one point were up in the green, ending in the red by such a wide margin. The SPY from top to bottom was down almost 6% from the top. The QQs from the top to the bottom before the close were in about 7.4% in either direction, guys. And days like today really goes to defeat investors' resolve as people continuously try to buy the dip. And as soon as we are presented with a little bit of green, the markets just take it right away. So I do not blame you if you're feeling a little bit exhausted right now, but we always have to keep our emotions in check overall. Now, the reason for such big volatility, guys, was of course, once again, due to tariff and political headlines. A few of them were noteworthy today. What started off the bounce this morning were comments about the 70 countries that are talking to President Trump, rather, in terms of the negotiations that are on the table. The more specific reason for that is 2 out of those countries are officially flying to the United States over the next 2 days to negotiate and strike some deals. Number 1 is going to be the team from South Korea coming to the United States on a plane in somewhat of an express fashion. That and another headline out of Japan saying that President Trump was also negotiating underway with Japan as they were also coming to the United States to broker some deals. That's on top of the rest of the 70 countries that are obviously trying to make some deals with the United States after being levied such very heavy tariffs by their trading partner. Now, that news was well received in the morning. However, it was quickly undone at the midpoint during the day when the White House press secretary, Caroline Leavitt, confirmed that the rumor of an increase of 50% tariffs against China would indeed be set in motion as of midnight tonight. Now, the total tariff rate against China stands to be 104%. Now, we had wind of that news yesterday. It was a rumor at that point in time, but when the administration confirmed it today, the markets really did not what they heard and proceeded to tumble in a very rapid fashion, which led to another spike in our volatility index. The VIX now closing the day above 50 at a record 52. Well, historically, in terms of records, guys, you would have to go back to either August during the unwinding of the Japanese carry trade, or during COVID when the VIX hit this high as well. And prior to that, you would have to go all the way back to the great financial crisis of 2008 to find record levels of the VIX right there, which has also led to some historic breaking day, set of days in the VIX, excuse me. Now, this is in terms of a chart presented by Charlie Bilello. Very interesting charts on Twitter by him. Highly recommend a follow. Now, these past few days in the VIX have been some of the greatest rallies in the VIX of all time in the fastest way. You can see here that as of today, or rather yesterday, and as of April 4th as well, the combined rallies of 108 and 118% respectively are some of the highest that we've ever seen on record. The data for today is not yet on this chart, but I do expect it to be on top of this one. You know, you'd have to go back in time, guys, 2018, 2015, 24, all the different types of days. The 2024 was, of course, the Japanese carry trade, and 2018 was another round of tariffs. But you can see that in terms of the forward-looking returns for the S&P 500, for the most part, other than one time in 2007, which was a very key point in time during the financial markets, of course, during the great financial crisis, you can see that everything after a 1, 2, 3, 4, and 5-year period in terms of returns are almost all but positive, except for that data point in 2007, as we know that that end of the recession largely lasted through 2009 when the markets were truly bottoming and recovering. So the data does show that across many different markets here, the total returns for the SPY were positive. So I know it can feel a little bit exhausting right now, constantly the push and pull between the political headlines, the constant push and pull on the charts as well can be very, very, very exhausting. But we have to hold strong and we have to hold firm. Now, I've been a big proponent of buying the dip, but as I've been saying, we need to buy very, very slowly to make sure that we have enough cash to be able to last throughout the entirety of the dip. Now, the markets recently have not been respecting the technicals so much, not respecting the fundamentals. They are truly, truly, truly pure news and headline based at this moment, as investors, both institutions and retail alike, just battle with the expectations for the future of the next 3 to 6 months. What does it look like? Are we going to have a recession? Are we not? Are we going to have massive layoffs? Are we not? Are we going to have massive inflation as a result of these tariffs? We do not know, guys. And in times of high uncertainty, that's when you get usually the highest volatility. So in today's video, guys, we're going to take a look at a few things together, of course. Number one, we're going to be going over the technical analysis of all of our major indexes. See how we are shaping up after today's decline. Are we still oversold? Is there any rotation to be had in the markets? We'll take a look at that first. Thereafter, we'll do our technical analysis rundown in terms of our big tech names. Big tech had a fantastic rally early on in the morning, gave it all back and even more. All of those companies, for the most part, except for Netflix, ending deep in the red once again. So we'll take a look at those big tech names, identify the key levels where we could be looking for trades, either in the short term or possibly even long-term investment nibbles. So it should be a very fun video today together, guys. Let's get right into it, shall we? So the SPY, of course, ending the day red, minus 1.57, and the Q's down about 1.8%. You can see the futures markets up here are also down almost a couple percentage points at this current time. The US 500, which is the S&P 500 futures, down 1.63, and the NASDAQ edition, more so the QQQs, are down about 1.97. And it's not only us, guys. Even foreign markets, as a result of these tariffs, have been affected. Two of the biggest ones, of course, the CSI 300, known as the Shanghai Index. That one is actually up today 1.71% as we casually await China's response. I'll remind you, last week they were very quick to respond to the increase of 35% in tariffs that we had just last week. And they might just be very quick to respond once again, possibly on the table as soon as tomorrow morning. Now, the Nikkei as well, the Japanese stock market, that one is down 3.51%, despite news of renewed negotiations between the United States and Japan. So their futures are down, China's are up, and ours, unfortunately, are down right now, too. Take a look at the heat map, guys. You will see that the damage was done pretty heftily today. Now, when we were looking at this heat map this morning, the entirety of the heat map was green, and now, unfortunately, everything was unraveling during the day after that China tariff news was confirmed, the additional 50%, bringing up the total tariff rate against China to 104%. Big tech taking some dips. Apple's business obviously getting hit the hardest because they have some of the highest exposure to the Chinese markets overall. Financials also struggling today. Healthcare, except for some health insurance providers, which were given a very good deal by the Trump administration to increase the fees provided to them by the Medicare plans. Those were up, but the rest of healthcare was indeed down. Consumer defensives and the more defensive sectors of the market were down as well. In terms of the one-day relative, guys, unfortunately, every single sector in the market ending in the red again. Least affected were utilities and financials. Most affected, energy, basic materials, and consumer cyclical. On the 1 week relative performance, guys, it still looks quite dire. Consumer defensives, utility, healthcare, and communication services. Some of the more defensive areas of the market were down the least, and the ones down the most, energy, technology, and basic materials overall. It does not look quite good at this current time, guys. I will admit, of course. And now, top to bottom on the Qs, you're looking at a decline where we close of about 23%, already almost pulling into the highs of 2021. And we have largely all but erased all of 2024's gains overall in just a few short weeks of time. In terms of the SPY is now almost officially in bear market territory, closing the day down 19% from the tops, and additionally also possibly soon into the 2022 and 2021 high levels. And now, additionally, guys, closing right where we were February 2024. So I know it sucks. I know we've erased a lot of gains very, very quickly, but that is the nature of a very rapid bear market to the downside. It presents us some fantastic opportunities, but it also can make your stomach turn. Now, moving into the technical side of things, well, in terms of the SPY, guys, we were commenting this as of yesterday as well. A bounce is very nice, but if a bounce is not followed by a clear and cut trend change, it does not mean much. It will just be likely a dead cat bounce. That being said, the bulls are desperately trying to hold on to those support levels, and if futures open the way they do, and if we get hit with some reciprocal tariffs again by China, well, the day might just end up in a red one as well. They're holding on to support, 525 down to 496, closing right at the bottom of the range. And I was telling everybody to pay special attention, guys, to the 4-hour trend changes that needed to be had by the bulls. Unfortunately, they were not able to get those done today. As you can see, they tried for it. They're trying to go for the higher lows, but with the futures now, I wouldn't be surprised if that is not a possibility. Take a look at the futures. The futures trying to get it done, guys, but it's not working, right? We had a little bit of momentum being unwound right now. We'll see how that carries on to the official ticker symbols right here, the SPY and the QQQ, but no official trend change just yet. So the bulls still are lacking a little bit of control on these shorter term timeframes. We are still trying to look for a bounce, but if the bounce does not come and we head lower, guys, once again, it will be lower high into possibly lower low. The next area of support for these markets are all the way down here, 475 down to 450 on the SPY, which would indeed be the levels of the 2021 highs. And if we do approach that zone, we have the 200 weekly EMA down here, which is this green line overall. And this area is going to be an area in which the SPY would find itself down 22 to 27% at the bottom end of the range. Tremendous buying opportunity, but we cannot spend all our cash at one clear level. We have to really nibble. And the best way you can get through this one, guys, trust me, is keeping your expenses low, trying to maximize your income and invest the difference into the markets. Sure, it may be extremely painful right now. It may feel as though you are throwing money into the fireplace, but focus on very high quality companies and the results are quite clear. In a few years' time, I'm not saying that this couldn't correct itself maybe in the next few weeks, in the next few months. It can always do so if ever there are more negotiations on tariffs and we move more towards free trade. The results are fairly obvious, right? You will be rewarded at some point in time over the next few years. But in terms of trading and investing in these markets, I think right now, if we're trading, we really need to have either day trading or week by week trading. We cannot project out longer than this current Friday for any of our trades because we know there are too many volatile political headlines that come through us every single day that could erode any single trends that we may have, such as we saw today with that nice little bounce, yeah? So if we're trading day or week maximum, but we are for long-term investing, guys, we now need to not be thinking in terms of weeks, nor possibly months, but maybe even in terms of years before you truly see the ROI that you're looking for in your portfolios, yeah? Can it be a V-shaped recovery? Sure it can, but the likelihood of that happening right now is somewhat quite low in my opinion. So as long-term investors, we need to focus on those two words, long-term. Sometimes we may not be rewarded for our buys immediately, and we have to focus on that. In terms of the fear and greed index, before we get into the Qs as well, I've been very low, guys, still a 4 on the fear and greed index. Market momentum remains at record lows. Net new highs and lows on the New York Stock Exchange. The strength also remains at all-time lows as not many names are making new highs in the markets right now. And even the breadth indicators, guys, remain at utmost lows. We had some very nice bounces early on in the day, but they quickly eroded. Percentage of stocks above their 20-day moving average is at a 4. It's at a 4 right now. You'd have to either go back to 2020 to find such a low read on short-term momentum or 2011 flash crash, or the 2008 great financial crisis. Percentage of stocks above their 50-day EMA right now standing at a 5.5. You'd once again have to go back 2020, 2018, end of tariff round number 1, 2016, Trump inauguration, and 2011 flash crash, and of course the 2008 great financial crisis. And percentage of stocks below their 200-day moving average at a low read of 15. Once again, you'd have to go back to the depths of the bear market a few years ago in 2022, or COVID, or 2018, or 2016, 2011 flash crash, or 2008. All historic time periods in the market overall. So just tell yourselves, guys, that these are getting to historically low levels, and we are, of course, extremely oversold. But as I've said many times, the market right now just is not caring about a few things, not caring about the macro data that comes out, whether it's the CPI, whether it's the jobs report. Nothing in the rearview mirror matters at all. The fundamentals don't matter, and even the technicals, guys, blasting through support zones, continuously oversold conditions, record levels of oversold on the weekly and daily time frames. So you know that the local bottom is possibly very soon. But as I was saying in yesterday's video, guys, do we come down here before we get the actual local bottom bounce, or does it come right away? That is what you do not know, and the markets will be beholden to all political headlines over the course of this week as we anticipate retaliations from not only China, but the European Union alike. Now, moving on to the QQQs. So the Qs as well were involved in a very heated battle over the course of the day. The bulls are trying desperately to try and form some sort of 4-hour uptrend, but the bears have taken back a chunk of that move over the course of the afternoon today. In terms of the daily bears still remain in full control of this market right now, possibly setting up the lower highs and looking for the lower lows. The lower lows can come in into this former level right here, 400 down to 372. Those are the previous highs from the 2021 end of the bull market and some of the highs of the prior to the fall 2023 sell-off. That level will be a total top to bottom decline of 26 to 31% overall, and the 200 weekly EMA, which has been a bastion of bullish support control levels for a few times in recent history, can possibly be tested in the next few days. I am expecting a big bounce from the bulls from here, but keep in mind on the weekly, who's in control here? The bears are in full control, so even if we do get a bounce, it will be most likely resulting in a lower high. Then we have to wait. Can the bulls change the weekly trend changes or get some weekly trend changes underway, or will it once again be a question of just setting more lower highs, more lower lows, more lower highs, and possibly more lower lows? We will take this market one day at a time because right now it's the best thing we can do. We should not be in a market mindset of trying to predict the markets further out than one day or 1 week. There's just too many headlines on the table right now, especially not leading into earnings season, which I will remind you starts on the Friday session with some of the major banks reporting: JP Morgan, BlackRock, Wells Fargo, BNY, and Morgan Stanley as well, with a lot more to come over the course of next week. Speaking about financials, let's look at their chart right now, down about 0.39 on the day. And same thing, right? We know the short-term control is definitely to the bears, trying to set up the lower highs. Big bounce right there, but now not looking so hot on lower time frames. These will be largely beholden to the political headlines this week and to corporate earnings on the Friday session as well. We can clearly see that these remain in oversold conditions on the daily time frames, trying to hold on to this small area of support, 44 down to 43.50. If ever we breach down below, we are heading right back down to the summer highs and lows. June, pretty much March all the way through June, a nice little 3-month range, which is largely 41.62 to 39.84. That would be a top to bottom decline on the financials sector of 21 to 24% overall, and would also be synonymous with the highs of the 2021 market. Just below that is the 200 weekly EMA. So we will see, are the bulls able to save the day over the course of tomorrow and get us a nice little bounce underway? Maybe if the China retaliations are not as brutal as people are expecting, maybe we'll take this one day at a time. Moving on to healthcare right now, down another 1.11, and we were constantly on the watch for the fulfillment of the Head and Shoulders prophecy, and now it's really coming true, is it not? So we are currently in the support range on the weekly time frame. This range is 140 down to 126, a very wide range, which is going to be a struggle for the bears to get through in one clean shot, that is for sure. But who controls the time frames right now? Well, of course, it is the bears. Look at this top to bottom move on healthcare, guys. 4.63% swing. Healthcare usually doesn't move that fast, but when it does choose to move, sometimes it can move akin to big tech. So that being said, guys, daily downtrend is still underway. Lower highs are now set. And if we do get lower lows into more daily oversold conditions, we should be targeting the bottom end of the range of support, which is roughly the 125 area. Now, this sector, respectively, below the 200 weekly EMA. That has not happened very often on healthcare. As a matter of fact, the last time it happened was during the COVID pandemic. One time, little touch here in 2015. And prior to that, you'd have to go all the way back to 2011, 2010, or 2008 during the Great Financial Crisis. So it's a very solid line, but if that very solid line breaks, keep in mind, the bears are going to use this as resistance for a lower high. So we're still waiting, guys, still waiting for these bounces to translate into daily uptrends for us to be able to find somewhat of a tradable bottom for longs. Keep in mind, even going short right now can be somewhat of a risky proposition, because if you go short and hold those shorts overnight, well, you may just be met with a 3-4% day swing on the next day, and you could be underwater very quickly and just crossing your fingers for more negative headlines to kind of save you. So you have to be careful in both directions, essentially, right? Have to be very nimble trading these markets as of lately. On to SMH Semiconductors, down 2.68% overall, and the pain just continues here, as well as Taiwan and China remain front and center for the battle between intellectual property between the United States and China overall. The lower highs are more than likely set, but we are possibly looking for a flush of the Monday lows. If that does happen, we are still in big daily oversold territory right now. And the next line of defense for the bulls is going to be down here, 160 down to 141. The consolidation range of the fall sell-off of 2023 and the highs of the 2021 markets overall. Playing a bit of defense here around the 200 weekly EMA. This one also does not get tested very often. The bottom of the 2022 bear market was the last test. Prior to that, COVID, 2018, and you'd have to go all the way back to 2015, 2016 to find similar tests. But if we do crack it, guys, we are probably heading down below here, 160 to 141, and top to bottom at this current time on the SMH, you're talking about 32% from the January highs, but from the all-time highs, you're talking about a decline of 37% down to the support range would be 43 to 49% overall. I know, crazy numbers, but that is literally the peak to the trough of the bear market of 2022 overall. So we're approaching some historical levels a lot quicker than we have prior before. And even the weekly timeframes, guys, across a lot of these charts are oversold. But as I said, it does not matter right now. Just as sometimes it doesn't matter when we're overbought for a very long period of time, we can stay oversold if the markets are just continuously throwing a tariff temper tantrum. Moving on to IWM Russell, another location in the markets that's been very tough recently for growth investors. We are still looking at a daily downtrend. We are still in daily oversold conditions at an RSI of 20. And in terms of the weekly timeframes too, well, we're trying to find a local base of support, 179 down to roughly 165 overall. The tops of the 2021, the tops of the August 2018 and January 2020 markets overall, and the bottoms of 2022 hitting into some historic levels right now. From the top, guys, you're looking at top to bottom decline on the Russell, 28% right now. So we will be looking for the bulls to uphold these locations as this waterfall drop by the bears simply just continues. Weekly oversold conditions, guys. And I mean, even though we've gotten lower on these markets, I mean, look, 25 RSI, you'd really have to go back to either COVID, 2018, and prior to that, all the way back to 2008 to find weekly oversold such conditions on the Russell overall. We will take it one day at a time, and I'll always remind you, bounces are nice, but unless they're followed by trend changes, you cannot say that the bulls have retained short-term control, and you cannot say that we've achieved some form of a tradable bottom. Moving on to the Dow Jones now, down about 0.84%, getting hit the least hard today, but still with a very wild intraday swing. Top to the close, 4.5% on the Dow Jones. The Dow Jones is moving like the QQQs right now, which is usually not the case. Daily oversold conditions, 21.42. You'd have to go all the way back to October 2023, the depths of the bear market of 2022, to find such oversold conditions. We are now coming into an area of support, which remains the 200 weekly EMA, 36,500. It does not get tested often, flushed through it during COVID, but in other periods where we're not facing a global pandemic, it can act as some form of a short-term bounce location for the bulls. So that's what we're looking for, especially when it's in confluence with something else, such as a prior resistance high for the 2021 markets, which should now be a first line of defense for the bulls. So still in the context of a big sweeping weekly downtrend into almost weekly oversold conditions. When's the last time the Dow Jones got weekly oversold, guys? May of 2022, and prior to that, the COVID pandemic. So historic times for sure. We are still scouting for these bottoms, but unless we can get some trend changes on these 4-hour timeframes, we cannot bank on the bulls' ability to set up for a daily trend change and set some form of a weekly tradable bottom. So keep all of that in mind. And even your more defensive sectors of the market have not been immune to the sell-off as of recently. Here is XLP, Consumer Defensives, testing its former resistance area, which should have been support. But as you can see right now, the weekly downtrends are taking over. The next stop for Consumer Defensives is down here, 73 to 70. Would be fairly interesting to go shopping for some trades down there. Even the dividend ETFs like SCHD coming down, guys, to November 2023 lows and maybe even October 2022 lows. That one has lost an absolute ton in the most recent days, and it's known to be one of the best dividend ETFs in the entire market. Moving on to utilities. Utilities, the exact same thing. We know that the weekly downtrends are underway, and if we were to flush this level, you're going right back down here, 68 to 70. Even a sector so defensive, such as utilities, has been hit by the weight of these tariffs, even though they're not directly affected by the tariffs overall. It's just the market sentiment that is degrading at a rapid pace right now. Real estate markets as well have been suffering too. We are now at a weekly downtrend on the XLRE real estate ETF, and we're coming back into a support level, which we have not had since a very long time too, either April 2024, November and October of 2023, or the depths of the bear market of 2022 as well. So if you're interested in some REITs and stuff like that, they're coming into very, very hot levels right now. Oh, coming into 52 to 50. Even a company like Vici, guys, is also coming right back down into its respective support, 28 to 26. I like this company a lot. Might be able to pick up a few shares here and there. And the energy markets, guys, unwinding as well. What used to be a very fantastic level of support that we were trying to base our trades off in the last few weeks, the stop losses have unfortunately been taken out at this current time. We have now flushed the 200 weekly EMA, which we regained in 2021, and unfortunately now have lost it. We are now desperately trying to hold on to the lower range of this support, which is 74.33. Those are some of the peaks of the market of 2018, guys. One level lower for energy, you're heading all the way down here to these guys, 67 down to roughly $60 as the markets just continue to get sold off, irrespective if you're a defensive sector, a cyclical sector, any type of sector. When you have these big red days of negative sentiment, possibly forced liquidations, and just negative market momentum, nothing right now is currently safe. Looking at the VIX obviously closing, as we touched upon in the intro, at the 52 level right now. Can we expand further? Of course, you can always expand further, guys. This chart went a lot higher even in the month of August, testing the mid-range of the 60 mark. And in COVID, we went all the way up to 85. And during the great financial crisis, this one almost went to 100, guys, in the 90s. And not to say that the VIX, right, can't go lower. It can go lower, but you might just be expecting a market that stays in a volatile environment for a while. I'll remind you, after the pandemic, even when we hit a little bit of a bull stretch with free interest rates and free money printing, right? The VIX stayed between 35 and 25 for a whole year. During the bear market of 2022, it stayed between 25 and 35 as well for almost a whole year. And during the great financial crisis too, even after we did hit the bottoms of the market, you can see how long this VIX stayed in very high territories. These are weekly charts. From the moment in time we cracked 35, we stayed above 35 for 231 days overall, almost again an entire year. So the VIX can stay high, even though it can eventually hit a short-term culmination climax peak. It can stay higher for longer than you would expect. So be very careful, especially if you're positioning with long options. You're paying a lot of volatility premium right now. So you have to be very, very, very nimble overall, which is even why sometimes some of the leap call options, the break-evens on them right now, guys, are just a little bit too high for us to be positioning in those types of assets. Moving into the yields right now. So the yields just continue to surprise everybody. There was a bond auction today, and not many people showed up, unfortunately. Now, this goes counter to the argument that President Trump is possibly trying to, this is a theory, right? Circulating theory, that President Trump is trying to, in other words, orchestrate a market crash or a soft recession so that he can have yields come down to refinance the trillions of dollars in debt that is due later this year. Well, I mean, that theory is not playing out too well so far, is it? The yields right now, 1.31% to the upside on the 10-year, back to 4.35%. And now the US 20-year, 1.5% to the upside, 4.8, almost back to 5. Why is this happening? This is supposed to be a safe haven trade, is it not? Well, yes and no, guys, right? The short-term yields do follow the Fed's interest rate overall, but the long-term yields do not. They are purely based on supply and demand for US bonds to foreign investors, both governments and institutions alike, and even domestic investors, institutions, and some governments alike. Shout out to the Fed's balance sheet. Why is this happening, guys? Well, in times of uncertainty, when the US is losing the predictable nature of its economy overall, if you are an investor, keep in mind, a larger investor, such as an institution or a foreign government, well, possibly right now, one way of retaliating against the United States is to dump their bonds onto the open market. That will definitely cause some pressure on the yields and go counter to what President Trump is trying to achieve right now. So we may have a little bit of foreign implications here to where other nations may be dumping US bonds, which is causing pressure on yields to the upside, but also people don't want to show up to buy. It stands to argue if the economy is losing the predictable nature that it once has, if there is more risk associated with that economy moving forward, well, you as a long-term investor, when you buy this piece of paper and lock in your money for 10 years, because you're definitely not buying the TLT ETF as a foreign investor, you are buying the actual bond, in which guarantees par value and pays you a coupon payment once every 6 months with the actual yield. You will require a higher yield, which is called a higher risk premium overall. That is why the bonds are not cooperating right now and why you're seeing such a rapid increase in yields. There's a lot of different factors going on right now, but unfortunately, we've now lost the breakdown overall, guys, right? Lost the breakdown. We had the weekly downtrend, and now you're going to have to wait a whole lot longer for these yields to possibly come down because the pressure to the yields on the upside is being outweighed. There are some people buying into these as a safe haven trade away from equities, but the selling pressure from either foreign institutions or foreign governments has just been too strong in the most recent 3 days. So it's a topsy-turvy environment for bonds right now, TLT right now, sitting at a low 88. This is arguably one of the cheapest assets for protection on the entire markets right now. But we know that it's a very, very complex trade overall. So any purchases of the TLT, you may need to be very patient for that thesis to play out. And you may need to be waiting for those actual Federal Reserve rate cuts, not only projections and forecasts into the future. That's everything for our asset markets. Wrapping it up with gold right now. Gold also down on the day, reducing all its gains that it had intraday as well. So we might just be looking for an environment where even gold gets sold off. We had the daily uptrend, now engulfing move by the bears into possibly support below 2950 down to 2900 is the target for that one right there. And just into weekly consolidation overall into this support range, which we just highlighted, and into the 12 EMA 2. Be wary though, if we pull back too much, it opens the door for the lower high and the lower low, and that would not be a very nice pattern overall. We cannot project too far. I'm just saying what you could possibly expect to see if gold pulled back too much, right? Gold is a very interesting trade, a very nice long when the only fear is a fear of inflation. It's a great inflation hedge overall, but it does not last in an economic downturn or a asset correction cycle. You don't need to take my word for it. Just go back and check on the charts for yourselves. Here's 2022, the bear market of 2022, right? Here is the initial stages of the COVID pandemic. When it started happening, right? Gold was also down. Here is the fear that was had in 2018 over similar tariffs. And when you go back to the great financial crisis as well, you can see that although gold recovered quickly, it still was not immune to going down in a very big way. And that is after a also very large rally leading into that recession as well. So keep that in mind, guys. Gold is not the end all be all safe haven trade. It too can go down. Now let's take a look at Bitcoin here. Bitcoin down 1.4%. And I mean, the technical setup, guys, was just very clear for a short, right? Lower highs into lower lows, lower highs into resistance, which the overhead resistance was 92.5 down to about 86.5. I can have a long-term bullish view on Bitcoin, but still acknowledge the fact that these charts are pointing to short-term short opportunities, yeah? So the daily downtrend is still maintained by the bears right now. We seem to be pushing into the lows. The next line of defense is 73,000 down to about 67,000 right here, the support range, which is the prior highs of the early 2024 period just last year. Weekly bears are in full control, and we continue to be in some form of monthly consolidation for Bitcoin overall. If you smash through this zone, well, you'd have to go all the way back to the prior all-time highs, which would be the lows of that range right there, which is 63 down to roughly 57. We will take it one day at a time on Bitcoin, but definitely that sector overall, which is crypto, not looking too hot because at the end of the day, they are the risk on asset trade. Now, moving into our big tech names, guys. Well, Apple shedding 5%. This is probably one of the biggest intraday swings yesterday and today. One of the biggest top to bottom swings that I've ever seen in my trading career on Apple. Top to the bottom before recovery, guys. You're talking about 11%. It was a massive intraday swing. We start off the morning very nicely, but then immediately proceed to just crush the levels one after the next. So unfortunately, right now, the bears still remain in full control, even if we are at a 20 RSI on the daily time frame for Apple. When's the last time that happened? I'm glad you asked. You'd have to go back to March of 2024. And prior to that, you'd have to go back a very long time, guys, talking about 2018 when the tariff situation was also front and center. That being said, we are in a large support range, 177 down to 161, the lows of the 2023 and 2024 markets respectively, and the highs of the 2022 bear market start overall. In terms of the weekly timeframes, we know the bears are in full weekly timeframe control right now into weekly oversold conditions on Apple. When is the last time that Apple has been at a RSI of 28 on the weekly timeframes? Well, you'd have to go all the way back to tariff episode number 1, in which we saw a similar test of the 200 EMA, and similar tests, a very low RSI on the weekly. So you have a lot of confluence right here in this section, guys, right below the 200 weekly EMA. So the bulls are trying to play as good defense as they possibly can. And we had a nice bounce this morning, but it was quickly eroded. Apple just front and center. And if ever we smash through this location right there, the next line of defense, the big one at least, would be 140 all the way down to 120. We know that Apple's been front and center to these headlines. They have a lot of business out of Taiwan, a lot of business out of China specifically too. And we know that the valuation was always fairly rich. I can redo this one at 170 if you want. We just have to change a few numbers around. The EPS will maintain the same unless the company guides even lower over the course of this year. So if you want me to do the math ahead of you, we're just going to take the new price divided by the same EPS. We're not going to guide down on EPS. Just wait. We'll wait for the company to give us guidance on that. 170 divided by 731. You're looking at a forward price to earnings of 23.25. So it's come down a lot. I will agree. It has come down a lot. And a forward PEG ratio right now of, that is if they keep the current EPS, still a 2.21. Unfortunately, guys, objectively speaking, you are paying a lot of money for the growth of this company. And we know that the valuation of this company has been relatively high in relation to its low revenue growth and the problems that it's been facing with competition in China overall and the difficulties it's been having with the rollout of AI. At the end of the day, Apple is still Apple, but even Apple sometimes can be going for some very cyclical and even structural problems. So is it a good deal to buy Apple here? Little bit. I still haven't nibbled on the company for my long-term portfolio. I'll be very honest. But if we can find lower than 150, I might just be tempted to start adding some shares, but I will do so very cautiously and very slowly. No swing trades for me just yet, guys. A little bit too volatile and a little bit too headline driven right now on Apple, although it can be a great time, guys, for selling puts under the market. With the high volatility, you can get premiums for the week, 140 to 130. Try to see that level by Friday. Moving on to AMD right now. AMD down 6.49%. as it is also front and center between the China and Taiwan headlines overall. Daily downtrend is maintained on this company. Clear as day, daily downtrend flush of the lows, and we are approaching the last line of defense for a long time for the bulls right now. 82 down to about 65 is that large support range with which the bulls have been able to maintain since 2022 and even since the later stages of 2020. You do not want me to tell you where the lower area is on AMD. It is not pretty, guys. It's like 40 to 50 bucks right now, right? That being said, the bears are in full control. You won't project too far. Weekly, deep oversold conditions, 27 on the RSI. The last time that that's happened for AMD, guys, this low, you'd have to go all the way back to 2014. All the way then when the stock was worth $3 to $2 overall, right? So a very brutal time period for AMD. That being said, the valuation right now is like literally dirt cheap. But as I said, right, sometimes it does not even matter to the markets right now. I'll redo the valuation for you guys right now with the same EPS. We'll keep a look at company guidance coming up soon. 16.7 in terms of forward price to earnings. Things are getting very cheap right now. And divided by the EPS growth rate, you're looking at a 0.56 peg. That is extremely dirt cheap for this company. The thesis is still on hand here, guys, even though they can be guiding for maybe a reduction in EPS and maybe a reduction in revenue growth. That could be the guidance. It will hurt the company, but they have a lot of space to work with here for expansion of EPS and expansion of revenue for the next few years. This data center and AI trade will not come to a grinding halt. It can slow down, but not come to a halt, which is why I still do like AMD, but I'm being very patient, extremely patient, and just doing tiny little nibbles, guys, because when it's a falling knife and you don't know where the bottom is, the last thing you want to do is blow all the cash you want to spend on AMD before we get some form of a tradable bottom or before we get some form of resolution between all the countries affected for these tariffs and all the countries similarly affected in terms of the semiconductor export restrictions, which is largely Taiwan and China right now. Now moving into Amazon. Amazon down 2.62% on the day. Amazon as well was up a very healthy fashion today, but as soon as the markets open here, guys, it was just down, down, down for Amazon. You can see no hourly green candle at all. Down 8% from the highs of the day, but still protecting the lows of the Monday session as well. Amazon is fighting right now, fighting a very large battle in the support range, 172 down to 150. We know who's in control right now, the daily bears, going for the lower high bounce. This was a very healthy bounce, guys, an extremely healthy bounce. Talking about a 618 bounce. So the bulls still have it in them to try for the daily higher lows and go for the trend change. But we know right now the fundamentals and the technicals sometimes just do not matter in currently daily oversold conditions still for Amazon, and now even weekly oversold conditions for this fantastic company. And that the last time that was seen was in June of 2022, May and June of 2022 overall. We are now in an area of confluence. The 200 weekly EMA is below us, this big support range, and these are all the highs of 2021. So the bears are not going to be able to make quick work of this section, in my opinion, which is why it's been a large battle the last few days. Big buys, big sells, as the bulls continuously tried to play defense on this fantastic company. At 170, the forward price to earnings is fairly good at 28.12, one of the lowest valuations you've found Amazon in a very long time, and a 1.4 peg overall. Still one of my favorite companies, guys. For the next 3, 5, 10 years for a long-term portfolio, I think Amazon is probably one of the best picks in the market. I have been DCAing into some shares, but being very careful for my swing trades as well. I do want to be writing puts if I'm choosing to write puts below this whole area of support. So talking about roughly the 150 all the way down to the 130 range is something that I would be targeting for some short-term swing trades if we are selling credit at very high VIX right now. Now moving on to Google. Google down 1.78% as well. Google, one of the stocks that dropped the least today, I will admit, but from the top to the bottom, guys, it still was a brutal sell-off, down about 5% from the highs of the day, still protecting the lows of the Monday session as well. Big push and pull in this region. A lot of these stocks are in massive support ranges. Google's support range is 150 down to 136. Still daily oversold conditions, and this is a very big level, guys. Not only is it consolidation from the end of 23 into early 2024, it's the all-time highs of 2021 when the company was not doing the numbers it is today, yeah? The net margins are higher, and EPS and revenue is a lot higher than it was back then. Take a look here. 2021 EPS, 561, now 8.9, and now the revenue as well, 2021, 257, and now 390 as well. So the company has much better fundamentals today than it did back then, but we know that that just doesn't matter right now. The 200 weekly EMA is right below us, 137 overall, and the bears maintain a waterfall drop control of this weekly time frame, weekly oversold. So in all these names, we are still looking for the bulls to come in with these bounces. You've seen how aggressive the buying has been in these massive locations for a lot of these stocks, but it's a push and pull effect, trying to find some form of a local bottom. While the VIX is high, I enjoy selling puts below the market, and at this current time, I'll be targeting below these lows right here in the 130 all the way down to the 115 area. You can get very cheap short put options down here. With the high VIX, you can write weekly put options, guys, in the lower 120s and the teens for Friday with this high of a VIX. I still think that selling credit in this market is the best possible way to extract some money from these markets, even amidst the volatility. Moving into Meta right now, 1.12% to the downside was Meta, but same, they were up nicely on the morning and unfortunately unraveling throughout the day. Top to bottom, talking about 7.5%. That's why, even though it looks like a small decline, when you look at the intraday moves, guys, it will make you very sick sometimes, right? The daily downtrend is maintained. Nice little bounce by the bulls here. Can they convert it into a daily trend change while protecting this big support range? 530 down to 452. We will have a look. Keep this one day at a time, guys. It's the best we can do, right? Is the big support range from earlier in 2024. Meta is not very close to its own 200 weekly EMA, respectively. And the monthly time frame, guys, just eroding right now. One of the last charts keeping a monthly uptrend. If you flush these lows, you will officially lose the monthly uptrend at 510, 530 roughly. The valuation is pretty fair right now. A forward price to earnings of 21.11, and the PEG ratio a 1.62. So Meta, still one of my favorite companies, guys, for the next 3-5 years, but short term, we don't know where the actual bottom on Meta is going to be, and they do have earnings as well as the rest of big tech names in the next few weeks. My favorite way of playing this, guys, is playing spreads, either credit spreads or short puts, way under the markets every single week, because we cannot project out longer than a week at the current time. And Meta indeed as well is in daily oversold conditions. Microsoft as well, tremendous top to bottom move, guys, from the morning to the end of the day, 5%, all the way down to roughly 6.5% at one point in time, still protecting the Monday lows at this current stage. We are battling, guys, battling right above support, 346 down to 323 on Microsoft, which coincidentally is the range of fall of 2023 and of course the highs of 2021. Yes, we've erased all the gains of 2024 overall and now back into the fall of 2023. The 200-day EMA on Microsoft is very close as well, so keep that in mind, guys. 340 and the support range could be a local bottom for the bulls. However, we know the bears are in full control, so right now still need to watch for the daily uptrend shifts. I mean, it stands to argue, right? If you can't even change the 4-hour time frame, we can't start talking about the dailies. nor can we start talking about the weeklies just yet as well. My favorite way of playing Microsoft. Additionally, short puts under the market. The fundamentals of Microsoft have always been fantastic, even in the context of bear markets, guys. They maintain very high margins. They're very diligent on cost control as well. And you can see EPS in the last bear market, 2022, went up, and revenue as well in the last bear market went up. So Microsoft's a company that can power through bear markets while improving its fundamentals. Even though sometimes the growth may slow down, it still does a good job of protecting its fundamentals. Moving on to Netflix right now. Netflix up 0.3%. Netflix has been one of the more resilient companies out there, but even Netflix, right? They were up substantially from the close of yesterday to the highs of today, 5-6%, and then from top to bottom, again, 6%, guys. Protecting lows of Monday, this is true, but the bears are still in short-term control of this chart right now. The higher lows are set, or sorry, the lower lows are set. The lower highs bouncing in to resistance. Be careful, 935 to 900, guys. If we unravel on Netflix and lose this 200-day EMA and the neckline of what? I'm glad you asked, guys. The neckline of this very massive head and shoulders on this chart. Netflix arguably has the largest room to fall out of any big tech stock out there. It is currently down top to bottom, only 18%. The rest of everything is plus 20. Can Netflix fall even further and consolidate? Look at the 3-month time frame, guys. The 3-month time frame is one that I've been using a lot recently to better get a sense of where the markets can go if things truly hit the actual fan over the next few months. You could be coming down to 700 to 600. So if you want to be patient, I'm not saying Netflix's fundamentals will erode. None of these companies, arguably, maybe except for Apple, have much capacity to erode fundamentals in a very rapid fashion, right? They have fantastic fundamentals, but sometimes the market just does not care. And when you're sitting at a price to earnings of 34, right? Well, that is a prime candidate for unwinding, especially if it's one of the names that's holding up gains the most. People eventually will even start selling Netflix too. Moving on to NVIDIA right now. NVIDIA down 1.37%. This move additionally was sickening on NVIDIA, guys. NVIDIA had such a beautiful day, was up almost 8% on the morning, and then topped bottom of the day 10%. So these topsy-turvy moves will make you quite anxious if you're on these short-term timeframes, yeah? That being said, the longer-term ones, the daily timeframes, it is still a daily downtrend. The lower highs are more than likely set into the resistance range, 111 down to roughly 102. You can call it 100 to 110 roughly, guys. It's been a big range of consolidation, yeah? Very big range of support for the bulls for a very long time. And now we're kind of losing it as we just erode this weekly downtrending cycle right now. Not yet weekly oversold, even though we are oscillating between daily oversold and not. The weekly bears are in full control. This next support range, I'll remind you, $96 to about $78 to the downside. At about $100 right now. Is NVIDIA cheap? Objectively speaking, yes. But keep in mind, this stock stayed expensive for a very, very long time. So it can also stay cheaper than anticipated for a long time as well. So plan your trades accordingly. I'm a big fan of selling premium on NVIDIA way, way, way under the market. I also think it's the best way of extracting some value because it's going to be push and pull, guys. It's so difficult to predict these intraday moves on these companies when they disregard the technicals sometimes. They disregard the fundamentals. They'll respect the large areas, right? We know that if we got in the lows of yesterday, we know that we have to offload those profits if we're swing trading into resistance, yes. But predicting what's going to happen overnight into tomorrow when the market is largely driven on political headlines, not the easiest task. Moving into Tesla right now, Tesla down 4.9%, coming down into its range lows of support. 220 down to 190 is that overall range on Tesla. Tesla, a lot of volatility recently. Daily downtrend is continuously in motion, and the weekly downtrend as well seems as though it wants to chop off a little bit more. If we flush through the 190, I'll remind you, we're going all the way down here, 160 to 130, which is the bottom end of Tesla's range that they did move into several times during 2023 and one time in early 2024 when the brand was facing similar issues of growth concerns overall. So Tesla still remains a very volatile stock, and the best way to play volatile stocks, if you are unable to pick directions and do not want to commit too much to buying the dip here heavy, you can write short puts well under the market and guarantee that at least you are insulated with a lot of room, right? From here all the way down there where you can write some short puts. It's like 20, 30% by this Friday or next Friday. Not the worst proposition overall, but I will remind you guys that even at the low 200s, the valuation of Tesla is very, very, very high. And we have earnings for that company coming up in just 2 short weeks of time. Speaking about another company that is still trading rich, we have to talk about Palantir. Palantir at one point today, guys, was up 10, 11%. They round tripped everything now into a loss. So this top to bottom move, another 12% move to the downside, guys. And the bears just holding strong for this support range, right? Or rather, resistance range now, 84 down to roughly 77.50. Keeping that in mind, you're looking for the lower high. Can the bulls do it? Can they get it going? We know that this was a very nice engulfing move overall, yeah? A 80% retracement. That does give the bulls a chance of trying to get the daily uptrend back. We'll see if they can do it. Below support stays put, 72.50 down to 65 roughly on Palantir. And the weekly time frame, unfortunately, is in bear control right now. If you flush these lows at 64, where can we possibly go, guys? There's not much support down below there. The next line of defense would be 60, the 12 EMA, as Palantir starts losing some of that monthly RSI momentum that it's had for so long right now. Unfortunately, weekly downtrend on this chart. We'll take this one day at a time. My favorite way of playing Palantir is not guessing. Is this the bottom? Is this the bottom? Is this the top? Is this the top? Going long, short with such volatile moves? Nope, I'm just going to sell premium here into the markets. I can get extremely attractive premium on a weekly basis, even below 50, from 50 to 40 moving forward, especially with a high VIX, guys. I'm not going to try to predict, unless I'm day trading, of course. If you guys are day trading, it's different, yeah? But if you're wanting to swing trade and take and call that this is the bottom and go for some weekly duration swing trades or 2-3 week positions for some longer swings, which we're working well, Palantir, for a very long time now, it's just not worth it anymore. I would much prefer to sell credit to this market at the lower 40s. Moving on to SOFI right now, down 3.65% overall. Another brutal day for SOFI, guys. Top to bottom. SOFI additionally was up a very healthy amount in the early morning, right? 7.5%. No, top to bottom move, 12% before rallying into the close a tiny little bit. Still protecting the lows of Monday and still somewhat daily oversold conditions on this chart. Daily bears are in full control right now. They're trying to set up the lower highs and go for the flush. The final area of defense is that $9 mark, and that is the previous highs of either 2023 or the early stages of 2024 as well. The weekly bears are still in full control of this chart right now. Still no sign of turning around. For that, you would need to set a new daily uptrend. We'll see if the bulls can do it. And if not, if you do have to come below and break down, guys, unfortunately, yeah, there's a couple of people here in the $8 range, but the true next big level of support is down here, $7 to $6 on SOFI. It seems as though just yesterday, the talks of being at 20, 25 on SOFI were a possible real thing for the spring and summer of 2025. But with these market conditions, SOFI as well, from top to where we are right now, down almost 50%. So I'm a big fan of buying SOFI down here, but I will continue to do so by writing short puts under the market and profiting from that volatility. Moving on to Uber right now, down about 0.87%. So Uber as well was a stock that was very volatile. There was a gap to be filled on the the Thursday to Friday session, and we just essentially filled that gap overall. Uber as well, daily downturn underway, not quite daily oversold conditions. Sorry, my big head's in the way, but top to bottom move on Uber today as well was fairly brutal, right? Uber was up on the morning, 7% almost, and now top to bottom, that same 7.5%, protecting the lows of Monday and protecting the lows of the support range. This is a very big support range for Uber overall, guys. Talking about, this is the highs of 2021 and the lows of all of last year, even 2023, culminating in the 200 weekly EMA. That range is 63 to 55. I'm still a very big fan of selling puts on Uber down here, and even nibbling some long-term shares for the long-term portfolios is not a bad proposition, but we have to build a position very slowly, because even if Uber is a very solid company at a relatively low valuation overall, we know that it is not immune to all the things affecting the markets right now. And lastly, TSM, guys. TSM down 3.28%. Unfortunately, this one as well had a very healthy open. The stock was up 4% overall before round tripping everything, ending down 3, top to bottom, almost 8%. TSM is desperately trying to hold on to this area of support right now. Excuse me, this box should be green. So currently trying to struggle with the 145 to 139 range. It's a smaller range, but it is there. The bigger one, though, glad you guys asked. The bigger one is the entire range highs from 2021 overall. That is 133 down to 115 on TSM, quickly approaching its 200 weekly moving average into weekly oversold conditions. Just the start of them, though. We know that this one can dip a little bit further into weekly oversold, and daily still oversold conditions of a very low read on the RSI of 24. The last time that happened, similarly, 2022 a few different times. So we know that the local bottom is very soon, and there's a very big battle going on between the bulls and the bears at these lower ranges. This is a top to bottom decline right now, guys, on TSM of 37 to almost 40%. The valuation of the company right now is extremely, extremely attractive. I mean, we redid it almost just yesterday at 160, or the days prior, right? On Friday, I can redo it again at 140 to let you guys know how cheap this company is. They literally had their earnings not too long ago, and they reiterated that 2025 is going to be a very good year for them. But sometimes the market just does not care when it's a sentiment-driven market. The forward price to earnings for TSM right now is 15.35. That is absolutely nuts if you ask me. And the forward peg ratio, when's the last time you saw TSM trading for under a 1 peg? It's been a very long time. These valuations are cheap, but can't get cheaper. I'm a huge fan, guys. Huge fan for a long-term position on TSM in these lower range levels. They've just done nothing but improve their fundamentals wildly, wildly since 2021. Take a look right here, guys. In terms of the EPS since 2021, 416. And now this year, double at 910. Their revenue as well, 57 billion, and now 112 billion dollars. They've 2x their fundamentals with the same share prices, which is where I love to buy these companies. We call them time machine prices for a reason. You're going back in time, able to buy the shares for the same thing that people did back then, but we know it can drop lower. So be very cautious and be very rather pace yourselves on your long-term portfolio buys. You will most likely be rewarded. And for swing trades, well, I'm a very, very big fan, guys, of selling premium in this market, where well below the current market levels for a short duration of time. Think a weekly contract only, and we take it from week to week. So that is everything I had for you today in today's markets. Tomorrow we'll cover more headlines, of course, and tomorrow we'll go through a lot more names. I'll try to keep tomorrow's video a little bit faster in terms of the pace now that we're used to these drops. And I'll try to cover as many of these names as I possibly can, names that we don't cover too often that may also be presenting some good opportunities for trades. I do a lot of them on the Sunday top 5 options plays. And even when I show you guys my portfolio on Monday, I kind of hint at what I'm looking at for the week. But tomorrow we'll do a more of a big rundown, a more broad rundown in terms of different companies overall, because there's deals all over the place right now. If you know where to look, especially if you are an option seller in this current market, you must be having a very fun time, especially if you're staying far away from the market right now, yeah? Or rather, far away in terms of the distance that you're putting on your strikes, right? That's everything I had for you guys today. Hopefully you enjoyed the recap today. Hopefully I didn't sound too bearish. I'm just trying to be objective and state things how they are, the fact that we need to be careful. And it's not the market to predict or project. It's a market to react, trade in a very nimble fashion on a day-to-day basis or on a weekly basis. We cannot project out too far. And if you are a long-term investor, guys, well, just focus on these charts, right? The forward S&P total returns after spikes in the VIX, they are always higher, but sometimes you have to measure your success at this point in terms of years. If it happens sooner, perfect. That's just a bonus. But you should be giving yourself a baseline in terms of years, because every share you buy today, you should be buying with at least a 5 to 10 year time horizon as a long-term investor, right? Channel your inner Warren Buffett. He very rarely buys into stocks expecting crazy returns within the next month or two. It's a question of years, right? That's everything I had for you guys today. Hopefully you enjoyed it. If you did, consider dropping a like. Consider also subscribing to the channel if you're new. We do these videos every Monday to Friday after the close. And lastly, if you have any questions, guys, I'll be answering all your questions tonight in the comment section. So make sure you leave a question on a stock, on an option, anything you want. I'll be very happy to answer you indeed. And lastly, if ever you wanted to participate in my private community, the private trading group, as a matter of fact, with almost 200 other members with a long-term vision for consistent trading gains, not too aggressive in terms of trading strategies overall, and focusing on the long-term and building long-term wealth with many different strategies and long-term portfolios, you can consider the Discord down below in the description. That is our private group overall, where I host or I provide all of my trade alerts overall if I'm looking to sell credit into these markets. So we've been having a very successful week this week. In terms of selling premium into these markets, you get access to all of my trades as soon as they're made. You also get access to our private morning live streams where I trade live and take all your questions on your stocks, your options, for about 2 to 3 hours after the bell. We usually have a very good time in there. You can ask me your questions in real time. If you cannot attend the live streams, they are always recorded, so you can watch them back if you want to, or ask me all of your questions in our chat rooms overall throughout the day on your stocks, your options, and especially your long-term portfolios and how to build them. I also provide private videos in which I do advanced option strategies for those of you that have small accounts, medium accounts, large accounts. there's definitely something to learn in there overall. And I do also provide all of my watch lists in there as an added bonus too. You just copy paste all my watch lists, guys. All the options watch list, the value watch list, the wheel watch list, everything I'm looking at, all the technical analysis, you copy paste my charts as well. Whenever I do technical analysis, support resistance ranges, and whenever I do annotations for hundreds, arguably, of different companies in the market after earnings or otherwise, when I analyze them myself, you also get those. You can just copy paste with 2 buttons, all my watches and all my charts, and make them your own. If that sounds like anything you would be interested in, the link is, of course, down below in the video description. And if not, I guess I'll see you back on the channel, guys. Pleasure as always. Keep your head up. We'll get through this one together, one day at a time, as I like to say. That's it for me. Have a great rest of your night, and peace.